what's happening with banks, and we said we'll address that. The fact that RBI now seems more favorable towards banks than before, and of course, just last evening they announced the final liquidity coverage ratio or LCR guidelines for banks, which are positive rather than negative, as was expected by the market earlier. The RBI has increased the runoff rates for deposits enabled internet and mobile banking system. The increase in the runoff factor is only about 2.5 percentage points as compared to the 5 percentage points which was suggested in the draft circular. Let me in fact take it across to Gaurav and try and understand the implications for banks, which stand to gain most, and what brokerages are now saying about the same.
Absolutely a very big push for banks in terms of liquidity from RBI, because now RBI has finalized the LCR norms, which were much awaited norms. And first, let's understand what are the changes. First, that they have assigned additional runoff factor of 2.5% for any kind of deposits which are accumulated from internet and mobile banking. They have also said that government bonds will be valued after applying a haircut. But what is a big positive is that they have actually lowered the runoff factor for non-financial wholesale deposits from 100% to 40%. Now there is a 60% fall in this runoff factor, which can actually boost the LCR, because this will actually help the banks to reduce the denominator for LCR ratio. Now let's understand what is the benefit is going to be. First is that liquidity buffer is going to get reduced. Other is that there will be sufficient time for transition, because RBI has said that this will be applicable from 1st April of 2026. So definitely a very much time that banks are getting. And lastly, it will also boost the LCR ratio for the bank, which can actually boost the deposit growth as well as advances growth for the banks. We also have some brokerages. So first, let's talk about IIFL. What they are saying is that in fact they have actually pointed out some of the names in the likes of Federal Bank, RBL Bank, Kotak Mahindra Bank, HDFC Bank, who could actually see the benefit because of the high proportion of non-financial operations. In fact, when we talk about Investec, they are also very bullish about this move. What they're saying is that we may see an positive impact of net interest margin somewhere in the range of 3 basis points, and it can also boost sector's ROE almost by 20 basis points in FY27. In fact, RBI itself has said that it will actually give LCR a boost of 6 percentage points versus what the street was expecting earlier of 11 to 19 percent point of negative impact from the draft norms that we had seen. We also have Macquarie, who said that this can actually improve the credit growth almost by 140 to 160 basis point. And lastly, we also have Morgan Stanley, who say that some of the benefits can also be seen in FY26. So definitely a very positive move in terms of liquidity for banks, and definitely on the back of this, we will be watching out on the entire sector in the day to day.
All right, thank you so much, Gaurav, for getting us all those details that what is the new norm about and what could be the implications. But on the same topic, we also had a word with Rikin Shah, who is a Senior Vice President at IIFL Capital, as he discusses the impact of this on the banks. Listen in.
The banks where we expect the benefit to be relatively more are the ones who have higher proportion of this non-financial corporate deposits, because that is where the runoff rate has come down from 100 to 40%. And the banks which qualify in this will be the likes of RBL, Federal, Kotak, HDFC and Bank of Baroda. So these 5 banks will see relatively more benefit from this final LCR guideline. On the other hand, someone like ICICI Bank is unlikely to see any meaningful upside from the current guidelines. Federal, RBL, Kotak, HDFC and Bank of Baroda, the margins can anywhere improve from 5 to 18 basis points for them, and the PAT can improve anywhere between 1.5 to 4%. RBL is an outlier where the PAT benefit can be as high as 12-13% as well.